this stock market rally has been the most hated market rally of all times, I think. I assume gold will easily go above $3,000. In my analysis, I think until October, we're going to see a pullback first. I could imagine that we're going to see 50 to 55K again. And then maybe that's the range where Bitcoin will bottom out and we will have a double low. And that's basically a good fundament to stand on and then start the rally towards 100K later the year and into next year.
With gold and Bitcoin having climbed to new all-time highs this year, the question on everybody's minds is whether or not it can go even higher still. Are we expecting a new high by the end of the year, or is this it? Is this time for a pullback? Are we at the peak? Let's find out with our next guest, Florian Grummes, Managing Director of Midas Touch Consulting, who was on the show last year calling for Bitcoin to go much higher to $50,000 when it was still at $25,000 around that level. So he had made the correct call last year. Let's see what his call is this year. He'll be talking about his market update and his outlook for the economy. This episode is brought to you by iTrust Capital, an IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1%. If you're over 18 and you want to open a new account with cash will roll over an existing account, click on itrust.capital/David in the link down below to learn more and get started. And if you fund your account using my referral link, you'll get $100 in signing bonuses. Welcome back to the show, Florian. Good to see you.
Yeah, thanks for having me, David. It's good to be back with you. And yeah, it's right. It's been last year in August, and Bitcoin did dip into 25K, and then the hype around the ETFs kicked in and took Bitcoin all the way up to 74K in the next year. This year, actually, in March, we've seen the new all-time high.
People can watch that interview once again with Florian and I. I'll put the link in the description down below. And back then, the sentiment was rather weak for the market overall, especially for the crypto market. Bitcoin was trading around, like you said, $30,000, $25,000, but you called for it to go to $50,000. Do you remember the rationale that you had back last summer?
Well, I mean, my main rationale has been since last year, January, that once we've seen the low in the bear market at $15,600, and we've seen a terrible sentiment, and you remember the bankruptcy of FTX and all these other problems in the industry. I simply thought that sentiment is so beaten down now there has to be a recovery, and the rationale was okay. Take the 61.8% retracement of the bear market. That's roughly I think 49,000 something. So yeah, 50K was a psychological number, and I thought we should go there, and we did. It took longer than I expected, but it went there, and then it actually blew through that number and went to 74,000 directly.
We're going to get your updated outlook for Bitcoin and gold this interview, but let's talk about the economy first. So you live in Europe. We'll talk about Europe and the US and the ECB and the Federal Reserve. So it's interesting because the ECB recently cut rates last month in June. This month in July, they kept rates unchanged. It's projected they may cut again in September. How do the stock markets in Europe react to the last rate cut?
Yeah, I think that's a very important fact. The German and the French index, they're both down. So that's what I also expect. I mean, since last year, July, when the Fed stopped hiking rates, the market is constantly pricing in the first rate cuts. I think in December, at some point, the market had priced in 6 rate cuts. And here we are 7 months later, and there still has been no rate cut. But the important fact is that whenever in history we had a similar situation, and then finally the Fed or other central banks started to lower rates, the stock markets don't react positively, but usually they move into a correction and they sell off. And that's what we are seeing now here in Germany and also in France.
And it's selling off on the prospect of a weaker economy, correct? Because the ECB, as I'm reading on the news, they're projecting a weaker economy or at least slower growth, which is part of the reason they're cutting rates. Is that correct?
Exactly. And I assume that the market then realizes like, oh, wow, if the official central bankers realize that the economy is not doing that well, then it probably really is like this. And that's why then people start to sell off their stocks, right? So it's all, of course, also a psychological game. But if you look back over the last, I think, 4 or 5 decades, you will see that most of the time, if not every time, they started lowering rates. It was not a positive signal. And still, the market participants believe that once there is these lowering rates, immediately the market will thrive and their speculation will kick in. But it's not the case.
Do you expect a similar result in the US? It's been widely speculated, if not priced in, that the Fed will cut in September. So, first of all, do you agree with the notion that a Fed cut will happen by September? And if so, what would happen likely to US markets?
Well, I'm not sure if it happens in September. I think the Fed has been so far rather successfully constantly kicking the can down the road, so to speak. So, as I said, in December, the market had already expected 6 rate cuts for this year. Now, maybe in September, there will be one. So far, they have been successfully buying time, so to speak. And I think they also have the wish or the plan to not interfere in the US elections. So I think they would at best stay neutral and do not anything before the elections. Of course, if the market goes into turmoil, they will come back rather quickly. That's something we've also seen last year when they rescued the markets because of the US bank run over one weekend. So unless there is drastic crashes or sell-offs, I assume they will probably try to not do anything until the US election.
This is an interesting year because the last time we had most asset classes rising at the same time, gold, Bitcoin, and stocks, was in 2021 or late 2020, when during the pandemic, the Federal Reserve released unlimited quantitative easing, pushing up all assets together. This year, we didn't get quantitative easing. In fact, it was a tightening period, yet it still
Right.
happened. Why?
Well, I think you have to differentiate it a little bit. I mean, I think we are all aware that the stock market rally has not been a very broad rally, but rather a very narrow one, driven mainly by a few tech and AI stocks, especially Nvidia, of course. And the broad market has not done really well. If you look at the Russell 2000 and like the normal mid cap and value kind of stocks, they all have not done really well. So yes, we've seen Bitcoin going to 74,000. I think that was a special situation also because of the ETFs, which changed the market drastically. And we've seen gold going to new all-time highs. I think also mainly driven because of the massive physical buying in China and in India. While in the Western world, the normal investor has not been really showing any interest in gold.
We're going to come back to gold, but going back to what you talked about for the Federal Reserve not potentially not cutting by September, don't they have to respond somehow to the lower inflation numbers that we got last month, for example? Down 0.1% on the month in the US, down from 3.3% yearly to 3%. Is that strong enough for you to show us that the trend of inflation is going to be down, which is what the Fed wants?
Yeah, no, I mean it's the trend is what they wanted to see, but I think the main mandate for them is full employment, and so they will look much more on unemployment numbers. And if they see there a drastic worsening or a downtrend or something, I think that's where they much more likely will act. I think the inflation number itself is not a criteria for them to raise or cut immediately. They need to make sure that employment is high, and that's the main mandate. So, of course, price stability as well. But again, I mean, right now you can still make the case that everything is more or less moving on, going okay-ish, I would say. But of course, if we get a strong sell-off into September, October, you can be sure that they step in. Um,
A lot of people are wondering whether or not inflation will return if the Fed starts cutting rates. What's your thoughts here?
that's the assumption that they basically maneuvered themselves into a corner, and as soon as they start lowering and maybe in a crash kind of situation need to lower massively and maybe even go back to zero interest rate policy, that will spark and unleash even more strong inflation. Yes, it's very likely. I think so too. I think that everybody is now very much sensible to this situation because we are seeing it in our daily lives. Grocery prices went through the roof. You know that nobody's lowering their prices anymore, and so people are aware of it. I think it will kick in more inflation if that happens. Yes.
Okay, so let's talk about the metals now, starting with gold. Recently broke a new all-time high, currently trading just below $2,400 today on the 22nd of July. So it's retraced a little bit from its all-time highs. Is this the top, you think?
Well, let's zoom out a little bit and look
Yes.
at the picture. Okay, so this rally started in last October at $1,810 in gold. And it was basically the breakout rally that took us above this long 3.5 year resistance area at $2,075. Gold had been running against that resistance for many times. It's been disappointing. Finally, it broke through in early December, came back down, needed another 2.5 months of consolidation. And then in February, finally, the gold rocket took off and broke through that 2075 resistance. And quickly, gold run into new territory, of course, and topped out in mid of April at $2,430. So that was what I expected. That was more or less according to the plan. And then we've seen since mid of April various days when gold had big sell-offs. So on that 12th of April, we had a big $100 sell-off at Friday afternoon. Very untypical, no news, nothing, just gold falling like a stone suddenly. And we've seen that kind of event happening a few times afterwards. Still, gold managed to make a new high at 2,450 on Whit Monday. $20 higher, which already showed that momentum had gone and it was just a merely new high. But at the same time, around $2,300, there was still coming new buyers into the market, or maybe a central bank buying physically and therefore supporting the price. And then end of June, the market was more or less oversold and it was ready for a bounce for a summer rally. And we got that rally towards $2,400 again. And by then, you could have made the case that it looks like market already again overbought the daily chart, so probably a kind of a head and shoulder topping pattern. And then you had the weekend and you had the failed assassination on Trump. And on Monday morning, I think the whole market suddenly started to price in that most likely the new president will be Trump. You've seen tech stocks selling off. You've seen suddenly Russell stocks kicking in and getting bought. And you've seen also gold quickly rallying within 2.5 days to nearly $2,500. The top was at 2,483. And then it turned around very violently. And now we're back below $2,400, nearly $100 below last week's top. And it doesn't really look very healthy to me, to be honest. And if I go back to 2016, on the night of the election, when back then the market was kind of surprised that Trump was elected president, you've seen gold also initially spiking dramatically higher in the same night, in the election night, and then came back and selling off for the following, I think, 5 or 6 weeks. And it looks a little bit similar to me. In my opinion, in my analysis, I see a rather overbought setup on daily, weekly charts. I see high optimism levels, especially in silver. I think there is greed. I see a rather questionable seasonal pattern for the next few weeks and months. And I see simply the fact that gold has gone up from 1810 up to $2,400 over the last 8, 9 months since last October. And now we have the second month where there's reporting no new purchases from China. And so why not accept that maybe there is time for a breather? So my expectations in the short term are not very high for gold. I would rather think that maybe we get a pullback. Textbook, kind of like it would be a pullback back to the breakout levels around $2,070, $2,100. That would kind of like technical analysis textbook. Doesn't have to be like this, but that's been my assumption for the last few weeks. And I think you can definitely make the case that gold has lost a bit of a momentum. But for this potential pullback to be confirmed, we need a breakthrough that support of the last 3 months, which is $2,280 to $2,300. And gold is still $100 above that number. So you can also make the case it's just another breather. It's been a volatile move higher. And if gold can regain 2,450 within the next few days or weeks, yeah, then maybe it's again on the way to 2,500. And if it breaks to that, yeah, we're probably going to see 2,600, 2,700. In the mid to long term, I assume gold will easily go above $3,000. in my analysis, I think until October, we're going to see a pullback first.
Before October of pullback. So let's talk about this recent pullback. So a lot of it, like you said, maybe just profit taking. Now, on July 11th, when the CPI numbers came out and the chance of a Fed cut jumped to near certainty by September, at least priced in by the CME Fed Watch tool, gold jumped up that day. As you remember, it went from 23.80 to 24.22 in one day. So that was a big jump. It's I wonder why it's erased most of its game. So either, like you said, profit taking, normal, or the gold market no longer believes the Fed cut narrative. Which do you think is more likely?
Well, I mean, you know that the gold market is an international 24/7, Monday to Friday kind of market. There's lots of players
Yeah.
active, and you always have to consider, and I think that's something that many gold bucks are missing out on. Your mining stock companies, yeah, they produce the gold. And if I'm a mining stock CEO and I see gold at $2,500, I need to lock in those prices for the next 3, 6, maybe even 12 months because I have expenses. I have to pay materials, I have to pay workers, I have to pay licenses, etc.,
Mhm.
etc. So many of those big gold mining companies probably have locked in pricing around $2,450 to $2,500 in the futures market. And that's initially synthetic supply, but these players have the gold in the ground and at some point will produce it and bring it to the market, right? So that's always one component. Then I told you already, I think China is not buying anymore at the moment. At least that's the official numbers showing it. And we know from the past that the demand from Asia, from China, is rather not blindly following prices. So they are usually a bit more contrarian or trying to be contrarian. And yeah, again, charts have become overbought. You've seen that the momentum has been going down very recently. Since April, gold did not really make any progress anymore. So yeah, I think it just take it's a healthy breather. I think gold will stand much better if it pulls back to 2,100 and then rallies to $3,000. That's my take still. Yeah. And also, by the way, the seasonal pattern, no? So it's not like in the first bull market between 2001 and 2011, where we've seen three times gold starting a rally in the summer, rallying into the spring of next year. We haven't seen these type of setups in the last 12 years since the top in 2011. It's been always a little bit tricky, the seasonal pattern. And since most of the demand now comes physically from China and Asia, the golden week in Shanghai, late September, early October, when the Shanghai Gold Exchange is being closed and there's no physical trading, that I think plays a big role nowadays. And we've seen it last year. The paper speculators in the West managed to sell off gold during that I think 8 or 9 days. Gold fell from 1945 to 1810. And then once the Chinese came back into the market buying physically, then gold immediately turned around and the rally that we are talking about started. So that's why I said early October, I would be probably assuming lower prices.
What's the long-term thesis for over $3,000 for you?
Well, I mean, massive money printing, not necessarily only in America, but all over the world. I mean, the dollar is still the best fiat currency probably. If you look at the money supply expansion in China, in other countries, you quickly will realize that it's unsustainable. And gold has a 5,000-year track record, and I think it's getting harder and harder to get it out of the ground. It the Chinese, the Russians, the Saudis, they're all accumulating gold. It's becoming more and more part of the international trade again, like it used to be in the past. Since the end of the gold standard, the US dollar has taken that over. But I think it's very obvious that for geopolitical reasons, more and more countries demand also part of it being paid in gold. And I think there's lots of reasons to believe that gold will move higher. It's just not going to be a straight line. It's going to be volatile. And usually it takes a pullback or a sell off in the market to shake off the weak hands. And then the market is ready for the next leg higher.
transitioning into our talk about Bitcoin now, the gold Bitcoin ratio, if you want to call it a ratio, but the correlation is the thing that people have been watching this year. It's interesting because gold and Bitcoin have, for most of 2024, largely been positively correlated with each other. We can discuss why. But just in the last couple of weeks, Bitcoin has continued to push higher, and just this week, gold has fallen. So, short term, this correlation has broken down. Do you pay attention to this at all? Is this important to you?
Yeah, I think, David, I've been one of the first ones to write about the Bitcoin gold ratio.
Yeah.
Years I'm looking at that ratio, and not because I believe I could forecast the market out of this, but more like because I believe in those two asset classes, and I believe that they complement each other, and I believe you want to have as much Bitcoin as you want to have as much gold as possible. And so I need to know when is a good time to buy Bitcoin and when is a good time to buy gold, and maybe do some rearranging within those two asset classes against each other. That's the reason why I'm following it very closely. And I believe they are not very much correlated, the two asset classes with each other. So I think, for example, Bitcoin is much more correlated with the NASDAQ than it is with gold. Um, but it's true that over the last few weeks, Bitcoin again has outperformed gold. But I can also make the case, if you remember, the first time we met in person was in Dubai in 2021. And back then, in 2021, Bitcoin rallied to 65,000 in April, and then it made a little higher high in November at 69,000. And here we are today trading at 67,000. So you could make the case that over the last 3 years, Bitcoin went nowhere. While if you bought gold back then, gold was trading clearly below $2,000 in the summer of 2021. So actually, gold has outperformed over that specific time frame Bitcoin. So of course, it's always in the eye of the beholder where you start where you pick the starting point basically of the comparison. Of course, if we go back to 2010, Bitcoin has drastically outperformed everything. But we're seeing that in terms of outperforming, it's slowing down because it's simply becoming more and more mainstream. And it's not that crazy little young bull anymore. It's becoming more an adult, I would say. But still, with the ETFs buying power, we've seen it over the last 2 weeks, how quickly it came back up from that pullback towards 53,000. That was pretty impressive. It was stronger than expected. It happened faster than expected. And it shows you what is still possible in that sector, of course.
Two recent developments in terms of supply, I guess, of Bitcoin in circulation. The Mount Gox repayments set to commence in July this month, amounting to over 140,000 Bitcoin, which is a lot of new Bitcoins in circulation. Germany, the government of Germany, where you're based right now, has recently sold all its Bitcoin. It hasn't really done any significant damage to the price. The price has gone up, but do these new fundamentals play a role in your analysis at all?
Yeah, I think I definitely didn't recommend to sell all those Bitcoins here in Germany, but they did. Maybe they needed the money. I think they just simply don't understand Bitcoin at all. But anyway, I think it had definitely an impact on the markets and on pricing and on psychology. But once the selling was done, Bitcoin was able to turn around, right? So I think the sale of the German Bitcoins had a significant impact. Now it's gone, but you will see if the payouts from Mt. Gox are really happening in August. I think it will also be pressure on the market, and we've seen that in the past, and it's nothing new. If you would have had your Bitcoins on Mt. Gox more than 10 years ago, and finally you would get some money out of it, I think you would also take some profits rather quickly. And it's actually a large amount. So that probably will create that second leg down in Bitcoin, which I still expect into September, October. I could imagine that we're going to see 50 to 55K again. And then maybe that's the range where Bitcoin will bottom out and we will have a double low. And that's basically a good fundament to stand on and then start the rally towards 100K later the year and into next year.
With President Joe Biden withdrawing from the election race just this weekend, some crypto speculators have commented that his exit could pave the way for a more bipartisan stance towards crypto. Now, in the past, he's been somewhat anti-crypto along with Elizabeth Warren, but now that he's no longer running for president, we could see more support from the regulatory side. Is that a narrative that you support?
Yeah, I mean, look, I think if Trump wins, and today there was talk that he might bring Larry Fink in as part of his cabinet. I mean, that will definitely be supportive for Bitcoin, and I think the Democrats also have realized that they cannot continue their harsh stance against Bitcoin and digital assets and crypto. Um, I personally, I'm not a fan of the Bitcoin ETFs. I think it's destroying the original idea of Satoshi. I'm very skeptic of the developments that have happened over the last few years. It doesn't mean that Bitcoin cannot go to 100K, to 130K, maybe even higher. But it's not the same Bitcoin that I was enthusiastic about 12 years ago when
Yeah, I'm curious about that. Which of Satoshi's, I guess, principles do you think it violates?
not your keys, not your keys, not your coins. If you if you have the largest money manager, asset wealth manager in the world holding your assets for you, and you just have a paper number somewhere, and this is not in your hands, this is completely violating the original idea. And they're accumulating massive amounts of Bitcoin, and which will also potentially theoretically being used to manipulate the markets. We've heard and seen stories about black box trading within these big exchanges, and I mean, it's just not the original idea anymore. And next thing you know is they will have to bring grandfathers and grandmothers to buy Bitcoin because there is no real world adoption still until today. So ETF speculation, yes, it's a great argument for higher prices, and it will most likely happen. But at the same time, same thing that we've seen in the gold market for years and years. We've been discussing, is the gold really there in all these ETFs? How are they being used to manipulate the prices? It's very intransparent. And that's why I remain skeptic about this whole idea. But it is what it is. Things are changing. And I mean, it's at the same time, of course, impressive the way that Bitcoin has made over the last 12, 13 years. But it's not the same thing that I fell in love with.
That's a good point. Not your keys, not your Bitcoin, but the argument here is that ETFs make it more accessible to everybody. Is that true?
Yes, that's true. It makes it easier, and I definitely understand and hear the argumentation and the point that just for administration reasons, right? If you're a money manager, a family officer, whatever, wealth manager, and then you have the bitcoins on a cold ledger, and you need to explain your client how much they are value now. It's very complicated. So of course, it makes it easier. I understand and get that point, but I'm sorry, I don't trust these big institutions, and I don't trust ETFs because you have nothing. So I personally want to see. I want to have single ownership of single stocks. Personally, for example, I don't want to have ETFs because I buy a black box basically. I don't really know, is it there? What are they doing there? So, but that's a whole story, I guess, for another interview because there's a lot of reasons if that I mean there's a great book about it, the great takedown. There's lots of things where you should consider maybe not having all your money in ETFs.
Well, how do you feel about the miners, both for Bitcoin and for gold? Because if your philosophy is to invest in the underlying, commodity or asset, um, and not put derivatives between you and the asset, well, isn't that argument applicable to miners as well? I'm curious to get your take.
Yeah, it's true. Definitely. I mean, there's always the interest in owning the gold, which is in the ground still, or owning the machinery that is mining Bitcoin. Um, the gold and silver miners have not been very successful to keep their material, basically. They've been constantly selling their gold and silver. I mentioned that before already. They're not basically collecting these assets, they're giving it away immediately. And the performance has been very disappointing over the last few years in the mining stocks, generally speaking. And I think if you and I would have talked about gold potentially trading at $2,400 a year ago, we both would have agreed that the mining stocks should have exploded in the meantime, but they haven't. Some of them have done well, but most of them have overall rather disappointed. The one mining stocks that have done well are the Chinese mining stocks, because as I said also before, this gold rally is mainly driven by the demand from China, the physical demand, and you've seen quite a few of these Chinese mining stocks doing really well. But your average typical North American mining stock has rather disappointed. And a similar situation you've seen in the Bitcoin mining space because is very cost intensive. I was actually very happy when we've seen so many mining companies moving into and towards America, especially Texas. I believe that there was, when you remember when China started forbidding and prohibiting Bitcoin mining, many of those companies moved to America, and I thought that was a great move. But you also see that the equipment, the gear is simply not competitive after 1.5 years. So they constantly need to reinvest. And there's a lot of pressure and competition in the market. So I think it's a very difficult and tough business as well. So that's why I'm also a little bit. What I like is rather a stock like MicroStrategy, I think, where they really own and hold the Bitcoin and where they use the leverage of basically using other people's money to buy more Bitcoin. I think that's a very good strategy, and you've seen that the stock has clearly outperformed Bitcoin. So that's probably a stock that I would prefer than one of the mining stocks. Yeah.
From a technical perspective, though, is Bitcoin exhibiting any continuing selling pressure that could make it lower?
Well, technically, I mean, we're still trading sideways, and that's pretty much same setup when we talked last year in August. So Bitcoin had also been going sideways since late spring into then late summer, early autumn, and it looks like we're going to see something similar this year. So the range is 75,000 and 53,000 at the moment, and it could still continue trading sideways back and forth. I don't see too much upside right now, but I also don't see it crashing to 30 or 40,000 at the moment. That would really take a disastrous crash in the general markets and a liquidity event, I guess. And that's not foreseeable at the moment. So I think it's going to continue trade sideways back and forth, disappoint the bulls and the bears, and then at some point it will be ready in September to start the next leg higher. And that will probably then take us to 100K.
100K by next year, you saying?
Yeah, it could happen. It depends. I mean, if Trump wins and he's doing something pro Bitcoin, it could happen in this year already. Otherwise, it will latest happen next year because we're still in the bullish cycle, and that should run until at least mid of next year, maybe December next year.
So the Nasdaq is also in a bullish cycle then because of how correlated it is with Bitcoin?
Yeah, I think so. Again, I think sell in May and be a little bit cautious up into September, October. But then, yeah, usually September, October, the next leg higher should also start in the stock market because the cracker boom continues. I mean, there's money expansion all over the world. I think there's no reason to doubt that overall everything will move higher because it's just reflecting the loss of purchasing power in your fiat money.
What's the floor for you for Bitcoin below which it would be a bear market?
I think I don't want to see it going much lower than 50K. I would say 45 to 50K maybe is still acceptable because we know that it's a very volatile asset. But below that, you probably have to assume that we're going to see a deeper pullback. And let me remind you, I mean, in the last cycle, yes, it was a special event, but when we had the Corona crash, the pullback in February, March, when everything fell in 2020, Bitcoin went back down to $3,800 after it had traded already at nearly 13,800. So it came all the way back down, made a little higher high than the initial bear market low at $3,200, and then the rally actually started, and it went from 3,800 up to 65 and then 69,000 2 years later. So these kind of things are possible in Bitcoin, and we've seen this massive quick recovery over the last 2.5 weeks. That's what Bitcoin can do, right? I mean, it's been rallying $14,000 in just 2 weeks. That's pretty much impressive, I would say. But it could also come down quickly again. So
yeah, one year,
yeah.
1 year ago we were dreaming about $50,000, and now it's like this is the floor. So it's come a long way in 1 year.
Exactly.
But I'm going to close off by asking you my favorite question to you every single year I speak to you. I ask you this question. What do you think is going to be the best performing asset this year? We have 6 months left to go.
I think it's gonna be Solana.
Solana. Okay, interesting. Now that's an answer you've never given me before. Okay, that opens the door to a lot of questions.
Look, the quick summary is simply that
Yeah.
it's the number three. And in a bullish cycle, we've seen it with Bitcoin, we've seen it with Ethereum, and now we're probably going to see it with Solana. I assume Solana has the potential to go to above $1,000 in that bull run, and it will at some point start. And it has been acting rather good over the last 1 year since the FTX disaster. It started a little bit later than Bitcoin, but since December 2023, end of December 2023, it's been on a tear. And uh,
Yeah, it went from
well,
basically nothing, $20 to now 181. But just for the audience's reference, it's now at 181. So $1,000 is more than 6x from here.
yeah, and I think that's a rather sure shot in the crypto bull market. You will find coins that go up 50x and 100x, but for every one of those coins, you will probably find and buy 10 coins that go to zero or do nothing or underperform. So I think Solana has a good chance to be a very good stable 5x kind of
But
sure.
what's the downside risk for Solana? Before it was tied to FTX, so that was the major, kind of black swan event. Um, any such fundamental risk we should be aware of now?
Well, we know that it's not the most stable blockchain, right? It had its problems, technically speaking, but I think the NFT hype will continue in some form, and it's actually there's a lot of layer two things being built on the Solana blockchain. Um, Price wise, yeah, we could see a pullback to $100, and I think that would be a great buying opportunity. Worst case, in my opinion, $85. That would be a pullback of 50% from here. That would be a great buying opportunity. But I think it's the well-established number three, and it will probably repeat more or less the same behavior that Bitcoin has shown in the past and Ethereum. So now that we are trading triple digits, very, very likely in that bull run up until end of next year, the market wants to see $1,000 in Solana.
This has been actually a very good year for investors overall. For most major asset classes, it's gone up. Stocks, the major indices, gold, Bitcoin, like we talked about. Oil has done reasonably, okay this year. Solana and the altcoins, as you know, major bull market. In a big bull market like this, what is your decision-making process? How do you pick one thing over another?
Yeah, you have to compare, of course, like the performance, right? And you just simply compare different assets and different vehicles, different stocks, different coins, and you just look at which is the stronger performance, which has better volume patterns and better technical patterns. Because also you could have bought a mining stock that went nowhere, or you could have bought a tech stock that went nowhere, or you could have bought a crypto coin that went nowhere over the last 1.5 years. So you need to pick the winners. You need to understand that the market knows more than ourselves. You look at the strongest ones, and then you wait for a dip or a pullback, and that's your chance to buy into something. Of course, you ideally don't want to run behind the train and buy new all-time highs.
Is there anything you're bearish on right now, Florian?
No, not really. I mean, I'm a little bit cautious. I try to make that case simply from the seasonal perspective. I think there's also a certain probability that we're going to see a big crash, but there's nothing
A
that
crash in what? Sorry, Florian.
yeah, it in some form it also smells a little bit like 2007 and 8. And if you remember the last 1.5 years, you mentioned it rightly, everything went up. But remember how many bears along the way, huh? All the time people called for a stock market top and they shorted the stock market and the market continued higher. And that was actually feeding the bull market, right? Because these shorts had to cover. So I'm not shorting anything. I'm just wanting to make sure that I have a decent liquidity position on the sidelines to be able to act if there's any nice pullback coming. But yeah, with these with this kind of setup that we have, and I mean, there's a lot of geopolitical risk. I think you also talked in one of your recent videos about potentially problems in Taiwan, an invasion, whatever. I mean, these kind of black swans can happen, and that would be terrible. I mean, it would be terrible consequences for the markets, for every market. And that's an example.
Yeah.
So there is potential for crashes, definitely. I don't see a huge probability right now, but it is there.
So
So
overall you're still bullish right now.
yeah, again, I would be a little bit cautious into September, October, and then I want to load up again and be fully invested by let's say mid end of October probably.
CFTC S&P 500 net speculative positions have been net short for most of 2023, the most short on record, and now it's reversed. It's flat. So the sentiment has, at least for the short side, has been more bullish now this year than last year. I've seen
And
that
don't
on.
forget, this stock market rally has been the most hated market rally of all times, I think.
Yeah.
And this year, I mean, that was for me the most bullish indications. Constantly, people were calling for a top and a crash, and it didn't happen because they were all bearish. They were either not in the market or they were shorting it, and that's always what a bull market needs. And now it changed. Yes, at least in Bitcoin and crypto, you have seen some panic sentiment levels 3 weeks ago. But if you look at the sentiment for gold and silver, it's very optimistic, if not greedy. And the same is true for the stock market. So you want to be a little bit cautious here. I think it needs a bit of a breather.
Fantastic, Florian. Tell us where we can find your work.
Yeah, Midas Touch Consulting is my website. We publish weekly research on gold, silver, and Bitcoin, mainly technical analysis, but I also keep a close eye on macro developments and, yeah, always open minded, try to look at everything and report honestly what I see in the markets. Obviously, I don't have a crystal ball, but I think my track record is pretty good. And we have a Telegram channel for free as well, where people can follow us. We have very interesting, very good discussions with investors from all over the world. Main focus, of course, precious metals, mining stocks, and digital assets, Bitcoin, and all the other interesting crypto stuffs.
Okay, thank you very much, Florian. We'll put the links in the description down below, so make sure to follow Florian there. I appreciate it. We'll speak again soon.
Yes, thank you very much, David. Thanks for having me. It was a pleasure.
Yeah, thanks for coming on as always, and thank you for watching. Don't forget to like and subscribe.